Everyone come in. Okay, so let's get started. Hello everyone and welcome to this webinar. For those of you who do not know me, I am Max Whiteley and I work in the Cloud Accounting Department at UHY Manchester. I'm privileged to be joined by Gabby from Fluidly today. Fluidly are an award-winning cash flow forecasting platform that UHY Manchester have now partnered with in our ongoing mission to provide our clients with the latest software and best client service. Before I hand over to Gabby, I'd just sort of like to raise a point to how important cash flow forecasting is at the moment. As you all know, we're in a very difficult time with COVID-19. I think a stat from The Guardian in last month was that 62% of businesses have less than 12 weeks cash to stay afloat. So without the furlough scheme, without the job retention scheme, without business interruption loans, some of these businesses probably would have been bust by now. So, coming out of this scary period, it's sort of quite important that we do sort of focus on cash flow and sort of how we're going to get out of this period. So I'm going to hand over to Gabby.
Brilliant. Thanks, Max. And thanks for inviting me along to speak on your webinar today. So just to briefly introduce myself, my name's Gabby McSweeney. I'm an account director at Fluidly. So that means that I look after all of our large and strategic accounting partners and really help them to get the most out of Fluidly with their clients. So before we kick off today, just a note on how you can get the most out of the webinar. So first of all, ask as many questions as you have while you're watching today. So I hope that you should be able to see on Zoom that there is a button that says chat on your screen. So it should bring up a chat box and hopefully you can see a message from me in there to say welcome to today's webinar. So this is where you can ask any questions. Please use this one rather than the Q&A just so that we can really share all of that information. I'll try to pick up as many questions as I can throughout the session today, but I'll also stop finally at the end of the session in case there's any final questions that you have. So secondly, engage. So I'll also be asking you some questions throughout the time today. So please be ready to put a yes, a no, answer some questions that I ask in the chat box there, that same chat box that I just referenced just a second ago, to participate in the session. Now, thirdly, log in. So if you are a client of UHY's listening today and you are using cloud accounting software, you should have already received an invite to Fluidly. If you haven't, if you are a client and you are using cloud accounting software, please do just drop a message in the chat now and we'll see if we can get you invited before we kick off today. What we really recommend is that you actually watch along and have your own Fluidly account open as we go through the steps, because that will actually really help you start to take the steps to set up your own cash flow forecast and use the time in this session and come out of it one step closer to having that plan. And finally, focus. So I know I've just asked you to open another window and watch along with Fluidly at the same time, but that should be the only other window that you have open. You've put aside the next half an hour, 45 minutes to really learn more about managing your cash flow and about Fluidly. So just make sure that there's no distractions and you really get the most out of that time. So thanks to Max for a really great introduction to the session, the webinar session today. As he said, now is really a more critical time than ever as businesses are starting to reopen. Spending is starting to increase again, but there's still very uncertain operating conditions for businesses in the UK. It's a time where managing cash flow carefully is going to be really critical. And this session is really to be focused on kind of pragmatic hints and tips to help you set up your own cash flow plan. So we'll kick off with a very brief introduction to Fluidly, and next we'll go on to how you can build your own rough and ready cash flow forecast within Fluidly. The second section we'll come on to is about how you can work on top of that base cash flow forecast to create a range of what-if scenarios, and that's specifically to allow you to map the impact of the kind of recovery phase of COVID-19. So a phased reopening plan, phased increase in costs, and those types of things. And then finally, as I mentioned, we'll come on to a final chance for you to ask any questions that you have. So as I said, before we kick on and get straight into Fluidly, a few questions for the people watching today's webinar. So I wondered if you could answer the following question by putting an A, B, C, or D in the chat section that you can that you'll be able to see in Zoom. So who currently listening has already got a system in place for managing their cash flow? Is the answer A, I've already got a cash flow forecast that I run in Excel? So maybe you are getting the actuals from your accounting software, updating that on a relatively regular basis to see where you are. Is the answer B, so you kind of have an idea in your head of what is a healthy bank balance for you and what is maybe a little bit worrying, and you have a look at your bank balance and then you think, okay, well, that means that I can pay these bills, or I'm going to have to push these back till next month, and that kind of thing. Is the answer C, you don't do any kind of cash flow forecasting or planning at the moment? Or is the answer D, so something else? For example, you're using, you've tried using some other type of software already. So really interesting to see the answers coming through here. I think what we're seeing is a lot of kind of the vast majority of people listening today have actually already kind of created themselves some kind of a cash flow forecast within Excel and are using that at the moment. So if that's you, please pay special attention to the very first bit of today's webinar about setting up your base cash flow forecast in Fluidly, because hopefully that should show you an alternative to do that in a bit more of an efficient way. And so the second question to everyone listening is, what are you really looking to get out of managing your cash flow better? Is it A, you're specifically thinking about COVID-19 and the impact on your business? So maybe before this all happened, you'd never really thought or worried about cash flow, but now you're specifically looking to map that impact on understand the impact on your finances. Is the answer B, really kind of operationally just working out what you can pay, what you've got coming in from your customers in the next few weeks and months, what bills you can pay this week versus next week, and to juggle those things and get a better picture of that? Or is the answer C? So you're looking to get a better picture of kind of slightly longer term strategic planning. So move from just thinking about where you are today to what the future might look like, and to understand how business decisions actually will impact your finances. So interesting, a really interesting range there actually. So a lot of people thinking generally about strategic planning and how they can get a better picture of what the decisions that they're making and the impact on their finances, but also quite a lot of people listening today actually doing that kind of operational task of working out what to pay and what's coming in and kind of chasing customers and things like that. So if that is you and you have said B, we're going to at the very end of the session today, we're going to cover a little bit on the kind of debtor management side of Fluidly. So look out for that section. If you're interested in the strategic planning, the what if scenarios that we're going to cover as the second section is going to be particularly relevant for you as well. So it's great to have that background and a better picture of people listening today and what you're interested in. So now we're going to kick on with a very brief introduction to Fluidly. So at Fluidly, our mission is really to help small business owners sleep better at night by providing more confidence and control around their financial future. So to do that, we've created tools that make it easier to look ahead, but also allow you to actually get cash in the bank when it's needed. So that's all I'm going to say about Fluidly, and now we're going to head into the main section of today's session, session, which is all about setting up your own cash flow forecast. So if you haven't done so already, now is the time to go into your own version of Fluidly, either by going to the invitation that you received to your inbox or going to fluidly.com and logging in with your details. And you should be able to get to a kind of picture that looks a little bit like this. Now, as I said, we're going to start with the setup of your base cash flow forecast. So you'll need to click the second tab along here. And just to let you know, there's two different versions of Fluidly. So there is Fluidly Starter, which includes a 3-month forecast, and there is the standard version of Fluidly, which includes 12 months forward. So if you are currently looking at the Starter version of Fluidly, you will see that this says here a 3-month forecast. Now, first of all, just to talk you through what you're seeing here on this screen. So the way that Fluidly works is that it links in with your Xero account and pulls in all of this information to create a picture of your cash flow. So Fluidly works off the reconciled or matched transactions in your accounting software. So you'll see this top first box in the left-hand corner, which gives you your reconciled balance as per your accounting software. Now, if you're looking at that and you're thinking that doesn't tally with how much I know is in my bank account, then there's likely that there's a couple of things that happen. One is that maybe you haven't reconciled your transactions or your bank in Xero recently. So if you've got lots of unmatched transactions, that will mean that those transactions won't be appearing in Fluidly and won't be included in that balance. So if that's you, then I'd really recommend just clicking this button at the top to go to Xero and matching off some of those transactions before you come to have an in-depth look at Fluidly, because that's really going to give you the best starting point from which to create that cash flow forecast. And now the second thing is that it might be that a range of bank accounts are included in this number. So if you click on the edit included accounts here, you'll see a list of everything that is set up as a bank account in your accounting software. So that includes, real bank accounts like your current account, your savings account and things like that, but it will also include things like credit cards, go cardless accounts, PayPal accounts, and things like that as well. So if there's anything on here, for example, like a savings account that isn't relevant to your kind of operational cash flow forecast, so that the money really that you can spend, then you can actually turn off any of those bank accounts that aren't relevant there. So what Fluidly will then do is it actually syncs with your accounting software every 5 minutes while you're using Fluidly. So if you do go back into Xero, reconcile or match some of those transactions, those will flow through into Fluidly pretty much immediately. So next, scrolling down this screen a little bit further, you'll see this cash flow graph, and you'll see in yellow, you can use the back and forward arrows. You can go back into the past to see a year's worth of your historic cash flow data. And you'll see this automatic base cash flow forecast here in purple. So first of all, before we come to talk about how Fluidly has got to that point and how it's created that baseline cash flow forecast in the first instance, let's just have a look at the historic information in yellow here. So if you scroll down the page to see the sections that say cash flow from operations, hopefully you should see that these categories down the left-hand side look relatively familiar to you. So that's made up of the chart of accounts that you've got set up in your accounting software. And if you click onto any one of these cells here, you'll be able to see the full detail of every single transaction that's included and makes up that total. So you can see the buttons here to sort by any of these categories, and you'll be able to see all of the details. So the date of that transaction, the invoice or the payment reference, the customer or the supplier, and some of mine are blurred out just to keep them anonymous because this is a demo account. And then you'll also be able to see the amount there as well. So now going on to speak a little bit more about the baseline cash flow forecast in Fluidly. So what Fluidly's aim is to make it easier to look ahead. So in order to do that, we try to do as much of the legwork for you in terms of setting up that cash flow forecast as possible. So in order to do that, there's a couple of different things that Fluidly does. First of all, it will have a look at any outstanding invoices that you've got raised in your accounting software. So that's invoices that are due to be paid to you from your customers, but also invoices that you have to pay to your suppliers as well. And what Fluidly will do automatically is it will try to place those things into your cash flow forecast based on how those particular customers have paid you in the past. So rather than thinking that every single person is going to be paying exactly on the due date of their invoice, it will model that more realistically based on their actual behaviour. And if you've got any of those invoices that are raised, they will show up in this invoices section here. So on the invoices section, you will be able to see, let's have a look if we can see an example here. So you'll be able to see a full list of any of those invoices, all of the details there, and the due date and then the expected date that Fluidly is created based on that historic payment behaviour. So obviously the invoices that are raised are probably only a small fraction of the total ingoings and outgoings for the next few weeks and months in your business. So what Fluidly also does alongside that is it will have a look into your full history of your accounting data. It will break down all of those transactions into an individual kind of customer and supplier level, and it will try to spot patterns at that level. So, for example, the International Pet Detective Agency, I can see that they've made a payment to Pets at Home last month. Is that payment, is it a regular payment? Is it weekly, monthly, quarterly? And if it can spot that kind of pattern, it will then say, okay, roughly how much is that? And then automatically map it forwards onto the future. So let's find an example of that in real life in these accounts now. And what I'd recommend, if you are looking at your own Fluidly account now, if you try and scroll down to something like your rent line. So if I have a look here, I can see in the past the detail of my transactions when I click on this cell. So I can see that there's one transaction here for this supplier beginning with S, and then I can use this white button on the side of the screen to scroll forwards into the next month. And sure enough here, I can see that now there's a couple of different transactions. This one beginning with S has repeated, and there's one beginning with W as well. And then if I scroll forward one more time, again, I can see those two different suppliers in there. Now, if I now scroll forwards into the future, another couple of months forward, what we'll be able to see is that Fluidly can actually pick up those recurring transactions automatically, even though no invoice has been raised at this point. So I'll be able to see those in my recurring transactions category there. And you'll see that it's picked up both of those suppliers. It said it's a roughly £2,800 and £2,400 payment respectively based on the historic pattern. And those two payments are expected towards the end of the month. So if you have, if you're logged into Fluidly and you have managed to click into this view here and find a recurring transaction, if you could just put a Y in the chat box now as a yes. Brilliant. Okay, so that is explaining here about kind of what you're seeing on the screen. And you can imagine that by doing both of those things, Fluidly starts to create a pretty granular picture of what the future might look like, but assuming the future will be the same as the past. So clearly today, your business tomorrow is probably likely to look a little bit different to what it did yesterday. So in reality, that's probably going to get you about 70% of the way there to actually kind of setting up your own cash flow forecast. And the important thing there is that you can add to those predictions, you can edit them, and you can add in that information about what you know and is going to happen in your business over the next few weeks and months. So now I'm going to show you 2 key steps to take in terms of actually setting up your own cash flow forecast. So the first step is to do with those invoices and making sure those are in the right place. And the second one is to do with adding to and editing those predictions that are based on the historic patterns within your cash flow. So first of all, thinking about those invoices. So as I mentioned, what Fluidly tries to do in the first instance is it will try to place those invoices into your cash flow forecast based on how those particular customers have paid you in the past. Now, as and when it's gone past the date when Fluidly was originally expecting those things to be paid, it's no longer possible to kind of accurately predict when that payment will happen. So those final invoices, you will just have to tell Fluidly where you want to see them in your cash flow if you want to actually see them in there. And so to do that, if you go to the section right at the top of your page that says, you'll see 2 there saying excluded bills and excluded invoices. That is where you can actually just drop any of those overdue invoices into your cash flow. So you'll see a list here of all of those invoices in question and how overdue they are. And if you just click into this left-hand side, the box here, you can set an expected payment date in here. And what that will do is it will remove it from this list and place it into your cash flow forecast. So it's worth saying here as well that some of these transactions on here may well not be relevant to include in your cash flow forecast. So there might be some things on here, for example, this £6 that's 230 days overdue, that's like a processing error, or maybe it's bad debt and you actually don't think it's going to be paid anytime soon. Now, if you can see ones like that in this box here, then there's no action needed at all. So anything in this box is not currently showing in your cash flow forecast. So if you don't want to see it in there, then you don't need to take any action. So again, if you're watching along, I would recommend that you find one of those invoices that you recognize there and set an expected payment date for that. So that's step 1. And now we're going to come on to having a look at step 2. So step 2 is really about having a look down this account line view that you've got on here and trying to spot anything that doesn't look quite right to you. So when you extend these sections here, so the receipts and the payments, work your way down this list and try to focus on the largest and most important account lines in your cash flow forecast, first of all. So the reason that I say that is that Fluidly is a live cash flow planning tool. So the aim of this is to help you kind of make decisions about your business with data. It is not going to be the type of thing that is kind of a kind of due diligence document that is every single cell on here is exactly to the penny, as would be your best guess at all times. And so therefore it's much more important to get right those things like, you know, the payroll, the rent, the cost of sales, the key revenue lines, and make sure that they are roughly what you think they are, rather than focusing on a couple of lines down here that says, okay, this is saying that my bank fees are going to be £40, but I know this is always the same fee and actually it's £50 a month, and making that edit, because that's not going to have that material impact on your cash flow, and it's not going to change ultimately the decision that you make. So working down this list as and when you find one of those sections. So for example, I'm going to have a look at this section here, mortgage revenue on completion. And I can see that even though, you know, it looks like my revenue's been impacted for the past couple of months and I've seen a lower revenue, actually, I'm thinking that by the time we get to August, it's going to be back up there at the kind of £20,000 mark. So what I'm going to do in here is just click on this cell that I want to edit. And I'm going to add in a prediction to put that up to the amount that I want it to be. So I can see that there's one in there that's already added. I can edit and take away any of those predictions by clicking on these 3 dots next door. So I can edit or I can remove that. And I can hide any of the automatic predictions that Fluidly has made. And then I can also just create and add in my own. So if I press on add a recurring transaction here, I'll see this box that says customer, and I can write anything in there that I like. So you can either start typing and it will start to give you a list of suggestions of your customers in Xero. But I can also just type in anything that I want. So I could, for example, put in here, test, new expected revenue. So I can kind of annotate those predictions as well. So if I put in here, I am going to put in another £8,000 to bring that up, that total up to around £10,000. I've also got the options to add increasing or decreasing month on month, and I can add for a set period of time by adding an end date to that regular prediction, or I can just add indefinitely. So when I then save that recurring transaction, it will then show up in this list after a couple of seconds as an added transaction and give me a tick to say that I have completed that there. And then when what you'll see is the purple triangle on the side of the screen as well to show that that's one that you've edited. And again, have a little go at doing that now. Do not worry at all about making any mistakes in this cash flow. So one thing is that the information flows one way from Xero. So when you make any changes in here, it's not going to flow back and mess up your Xero records in any way. And also, if you add in or remove a transaction, it's also really very easy to undo that again. So once you've done that, you should, and you've kind of worked your way to the bottom of your cash flow, you should be getting to the stage where this is kind of a rough picture of actually what you expect to happen over the next few months. Now, a final stage on this base cash flow forecast is to set a threshold. So that threshold is that kind of amount that for you in your head is kind of like the safe amount of money, or the amount of money that you wouldn't want to go below. So it could be a positive number, say if you always just want to have that buffer of £5,000 or whatever it might be, or it could be a negative number. So if you've got a arranged overdraft, if you've got credit facility, then that number may also be negative too. So if you click on the one that says set threshold, you can edit and put in what that amount is for you. And then what Fluidly will show you is how far away from that number you are, both in time, according to your current cash flow forecast, and in money today. So it's telling me that I'm going to hit my threshold of £100,000 on the 15th of January 2021 at the moment. So that is the section of setting up your base cash flow forecast. And now we're going to move on to creating a what if scenario to build on top of that in Fluidly. So this is particularly important and should be useful for those people who have are wanting to think about strategic planning and understand how certain decisions will impact their finances. So to get to this section, if you just go to slightly below where it says the 12-month forecast and find the section that says plan. And you'll see there's various different options of plans that you can make. But for the purpose of today's call, I want you to choose the one that says keep the business above water. So as you come onto this page, you'll see that it looks relatively similar to what you've seen on the base forecast page. So you'll see the cash flow graph at the top. You'll be able to see that on a weekly and a monthly view. You'll be able to use the arrows there to scroll backwards and forwards. But the key difference here is that you've now got these options on the right-hand side that actually reflect those maybe decisions that you're making or things that might be happening to the business that might impact your cash flow. So the one that we're going to start with and we're going to have a look at first of all is this adjust monthly cash in from operations. So this one allows you to adjust your whole revenue for your business on a percentage basis. So for example, for this particular company here, I am going to say, right, the International Pet Detective Agency is a shop. We think we are going to fully open from the 1st of July. But actually until September, we think we're still going to be at kind of 50% of under our revenue forecast because we've got to enforce our social distancing. So I'm going to choose that time frame and I'm going to choose July, August and September. So I'm going to make that till the end of September. And then I'm just going to use the purple slider there to adjust my revenue forecast. So if I move this to the left, I'll be able to see in real time on the graph above my revenue moving, and I'll be able to see there at any point the difference between my new plan that I'm making and my base forecast that we just set up together. So you can also just type over this cell if you're looking for a particular number. So it will then show me here as well the total change to cash over that period and the month-on-month change in this section here. I can then actually rename that section as well. So I can put in there, for example, loss of revenue due to social distancing. Now, as and when you've thought about that section here, you can then start to build up a picture by adding more blocks onto this plan. So for example, if I am anticipating a loss in revenue, I am then also going to want to decrease my costs. So I'm going to then use this by account line, adjust an account line block to map a reduction in my costs as well. So I always know that for my business, the first spend to cut when we hit a glitch is the advertising line. So I'm going to say that for the next year, I am going to adjust revenue down by, I'm going to adjust this cost. I'm going to put minus 100%. So I'm going to stop spending any money on advertising. And what I'll be able to see here is that that would mean a total saving of £21,000. So I'm almost, well, I'm some way to getting up to that kind of £60,000 that I've lost due to having 50% of my original revenue forecast. So that's the kind of main basis of the scenario planning within Fluidly. Now, I just also wanted to give it a little bit of context in the case of setting up your recovery plan for post-COVID-19. So I think it's becoming more and more clear now that the things aren't going to kind of just go back to normal as soon as the restrictions are lifted. They're likely to be much longer lasting changes. But as we move, and what that means for kind of businesses is that as we move to the recovery phase post-COVID-19, adjusting your business isn't just going to be as simple as going back to the original plan or projections that you had pre-coronavirus. So businesses face a unique challenge at the moment over the coming months as government schemes start to wind down, the job retention scheme, payment holidays, for example, but there's still likely to be a lot of consumer uncertainty and possibly also added costs into the business to enforce social distancing. So therefore, it's really going to be a balancing act between moving ahead and getting back to that kind of stages of pre-coronavirus revenue, but also applying caution so that your costs don't spiral out of control before your revenue is recovered. So in order to achieve this this balance, the kind of key things that you want to be thinking about in your cash flow plan is about phasing the return to revenue growth in your projections there in terms of your costs and your receipts as well, and also creating as many possibilities, allowing for lots of different scenarios, thinking really widely about the possibilities so that you've got all of those covered. And now I'm just going to have a little look about how you can use Fluidly to actually map that onto your cash flow. So in terms of this phased return to revenue growth, the best way to do this is with multiple blocks for different time periods. So I'm actually just going to, I can see the first thing that I did was create a minus 50% projection from the 1st of July to the end of September. But I'm actually going to think that from October to the end of the year, I'm probably still going to be seeing a kind of 20% reduction in my revenue. So I'm going to just drag and drop a new block onto my cash flow, this cash adjust cash in from operations. And then what I'm going to do there is the same as I did, exactly the same as before. So I'm going to change the date parameters to go this time from the 1st of October through to the end of the year. If I extend this version here. So I'm going to adjust those date parameters. To start from October. And then I'm going to adjust, that a percentage change to a minus 20% rather than a minus 50%. And then what I can always remember to do is rename this section something that reminds me of kind of why I've made that change. So conservative reduction in revenue until the end of the year, something like that. So similarly with your costs, you're going to want to think about, based on your new revenue projections, what costs you can afford to increase and when. And a really handy tip here when you're thinking about this is to remind yourself of any costs that have actually decreased during the pandemic, so that you remember to refactor in all the costs that will increase again when you go back to normal. So one of the ways that you can do that is to go back to your base cash flow forecast, remembering to save the work that you've done on your plan so far, and just have a look at those historic few months and have a look at those account lines that have actually reduced in the last couple of months and the biggest changes there. And those are the ones that you want to refactor in that growth by using the adjust account line or the adjust a customer or supplier blocks in your cash flow forecast. So one of the common things and the decisions that people are thinking about at the moment is, if they have furloughed people on the job retention scheme, if and when and how to bring those people back. So one of the easy ways you can start to map those different options onto your cash flow is to use this block that says add extra cash in or cash out. So what you can do here is choose a date up at the top for projecting that you're going to start to bring someone back. You can choose the gross salary by actually just typing over in that box. And then you can change that to a regular prediction, a regular transaction of their wages. So for example, monthly there. Now I can then rename that. So maybe that is, bringing a Bob back from furlough, and I can also add in a description there to give the kind of any extra details that you want to add. I can then move about that date if I want to as well, to then adjust that, and so that I can see the changes on this graph above and see where I'm going to be in the next few months in terms of my projected cash flow. You'll see that there's various different, final things just to say on here, so you'll see that there's various different options. So to take out a loan, for example, get an investment or a grant. And if you click on this other section, you've also got a real range of additional possibilities. So from hiring a new staff or making investments in property or machinery. So that brings us to the end of the kind of what if scenario planning within Fluidly. Just a quick note now on a couple of things. So to talk about the differences between the starter and the standard version of Fluidly, and also to cover the a part of Fluidly that actually helps you get cash in the bank when it's needed as well. So with it all built within Fluidly in the same platform is the ability to start actually improving your cash flow as well as understanding it and forecasting it. So on the Chase tab up here, you'll see the debtor management side of the platform. So this really helps you to prioritize which of your customers need to be chased and to automatically generate emails to actually remind those people for payment. So you'll be able to see all of the details there. You can preview an email and send it from Fluidly that includes the links to all of their invoices that they've got overdue. You'll also be able to keep a record of any activity that you have done in terms of chasing up the people who owe you money. We also have the funding tab up here as to help you understand your options for getting cash in the bank via funding. So we work with around about 30 different lending partners, and by using the data in your accounting software and matching that to publicly available companies' house data, you are able to get an indication of actually whether you'd be eligible for some of these loans and some of these financial providers, and actually how much you can expect to receive, how much it would cost you before you've gone through any process of having to supply documents, offer up bank statements, and so on. Now, if you do want to explore options for funding further, you can request a callback with one of our experts in-house who can just talk you through that on a no commitment basis. So now, just coming back to the forecast, I just wanted to spend the final couple of minutes talking about the main differences between Fluidly Starter and Fluidly Standard. So as I mentioned at the beginning, the starter version of Fluidly includes a 3-month forecast. So that includes 3 months forward in your base forecast and also 3 months forward in your plan as well. With the starter version of Fluidly, you'll be able to create and save your first plan, but you'll be limited in terms of the amount of blocks that you can add in there. And you will need the standard version of Fluidly to actually be able to download to Excel your base forecast and your plan, to see 12 months forward rather than just the 3 months, and also to create and save multiple plans to allow for those different scenarios. So could I just ask now, if anyone is interested in hearing more about the standard version of Fluidly, if you could just please put a Y in the chat box now, and Max will have a chat to you after the session. Okay then, so that pretty much brings us to the end of the session. And just before I hand back over to Max for a final sign off, I just wanted to give you a final chance to ask any questions that you have today. So if you do have any questions, if you could just pop those in the chat box, that would be great. And I can also see that we've got one attendee that has a hand raised as well. So I'm just going to send that person a message. So one question about access to the webinar. So this webinar is going to be recorded. So we'll make sure that UHY have that so we can follow up and re-watch afterwards. one question into does it have to connect to Xero? So yes, Fluidly is a direct link with your accounting software. So you have to be using either Xero or QuickBooks to use Fluidly, and that's what really gives it that value of updating automatically and bringing in the actuals on a live basis. So I think just one more question coming in here. Invoice discounting income. Yes, so we do have people using invoice discounting who are using Fluidly. If you've got that set up as a bank account in your Xero account, you may well just want to exclude that bank account from your cash flow forecast with that top button there. And you just be aware that some of the money coming in from your invoice discounting may appear in one of these sections down below in terms of cash flow from investing and cash flow from financing. Now, if you do have any more specific questions about invoice discounting and you're having a look at your own cash flow forecast with that in mind, then that's probably a bit more of a specialist question that you can ask either at our support chat here, or you can be in contact with UHY as well. So I think that is it for questions. So with all that remains really is just to hand back over to you, Max, for a final sign off.
Brilliant. Thank you very much, Gabby. That was really great. Hopefully you guys that have delved into this session found some sort of useful tips and tools that Fluidly can offer to help your business succeed post-COVID and beyond. If you're thinking, Max, yeah, this sounds great, but I'm not 100% understanding it, I'd like some more training, I'd like to run through it with me on a bit more of a personal basis, then please do email myself, Ali, Chris, or another member of the UHY Manchester cloud team. I'm going to put my email in the chat in a second, but yeah, so just please do reach out if you get stuck or you want some more advice. And if anyone has any questions, then feel free to ask away. Thank you very much, everyone, for joining this webinar as well today. So yeah, my email is now in the chat if anyone would like that. Thanks again, Gabby.